This is a tough one. Solana, Avalanche, which is going to return back to all-time high quicker? Oh man, Solana, Avalanche, two layer 1 solutions which did really well in the last cycle, both now down over 90% from all-time highs. Which is more likely to return back to all-time highs? Which am I backing from here on out? And what are the metrics saying for each of these and how do they stack up? Don't forget to subscribe. Check out the link in Bybit if you want to buy any of these cryptocurrencies. Let's get straight into the charts here, guys. And you can see right off the bat, Avalanche down 91% here from all-time highs. Severely retraced. Solana down 92%. Which is more likely to return back to its glory? We know that Solana was as high up here as $260 at the all-time high, 92% retraced, and Avalanche was as high as $146. Which is more likely to deliver the 11 to 12x ROI to return back to all-time highs? I'm going to be breaking down the key levels and which I suspect can return. Now, before we do that, let's look at the technical levels. Look at where we are here on Solana, and let's bring out the Fibonacci retracement tools. You guys know this is one of the most important tools for me to kind of analyze where we at with this project. So if you take the zero line as the peaks of the right at the bottom here, where Solana was at its worst point here, around $7.40, it's done really well to get back to $21 granted. But you want to be looking at this golden ratio, and the golden ratio sitting between 0.618 and 0.7 brings you back to $168 to $176 here on Solana. If you were holding Solana and you really wanted to hold this going into the next cycle, that's the bare minimum you'd want to be getting at. And you want to be asking yourself, can this project get to those levels? Then you're looking at all-time highs at 260, and then you're looking at the Fibonacci extension at 429. If you're investing in Solana from here on out, you wouldn't want to be investing in it unless you think it can get at least into the golden ratio and then quite comfortably back to all-time highs. That's what you'd be looking for. Similarly, what are those levels on Avalanche? Well, again, from the lows down here on Avalanche, sitting at $11.13, you want to be looking to see, can it get to its golden ratio? That'll bring you to $97 to $101. Again, getting your all-time highs back in that 150 range. And then your Fibonacci extension can take you up towards 237. Those are the key levels. If you don't think your project can hit those levels, then your question will be, what is the opportunity cost? Now, a lot of people are going through this right now. They're sitting on projects, myself included, which have retraced quite severely from DCAing in the bull market highs to now being in the depths of the bear market. And we're trying to get prepared for this next bull market. Now, there's something called the sunk cost fallacy, right? You don't want to be holding on to coins which are 90% retraced just because you're emotionally attached to them. You have to make sure you're backing the right horse from now onwards. You need to forget what's happened in the past. Make your decision based on, if I have $100 in any project right now, forget the baggage from the past. If I have $100 in any project right now, would I rather it be an Avalanche, Solana, or any other project? That's the piece of work you need to be doing now to get ready for the next bull run. So then I'm going to show you my thought process of how I start to compare these projects and how I look at them. Now, you guys know I've had an up and down relationship with both of these projects, particularly Solana. Right? I've made very public my opinions on Solana. I was very early into Solana. I was buying in that $20 range and less than $20 on some of my DCAs. So I had a really low cost basis, and now I'm comfortably break even, if not slightly in the green right now. So even though Solana went up to 260, I didn't take any profits. I rode it all the way back down. I lost a lot of confidence in Solana. And this was before the FTX drama. It was the outages. It was the network outages. So again, I'll link up the videos for you guys here so you can see in real time how my emotions and decision making have evolved around Solana. At this current point, I'm holding Solana, but I'm not actively adding to it, but that could change. I'm going to break down a few of the reasons why. Similarly with Avalanche. Avalanche was a project I was comfortable DCAing into. You guys know I'm a big fan of Phantom. Phantom's part of my portfolio. Avalanche was also part of my portfolio, and I've not sold any either. But the question is going to be, am I going to back any more dollars into this project? Am I going to add any more into Avalanche? Or are there other more exciting layer 1 solutions like Aptos or Sui or any other projects out there? We covered off yesterday Cadena and Casper from a proof of work perspective. Are there other projects which I'm more excited to hold right now and add future cash to those projects instead of doubling down on projects like this? So let's start delving into some of the on-chain metrics. And what we'll start off with here is the active addresses. If we take a look at the on-chain metrics, you can see here that from a monthly perspective in June, Solana boasted 7.85 million active addresses on its blockchain. If we're to compare that across to Avalanche in June, Avalanche boasted 1.3 million. So this is one of the benefits of Solana. A lot of people who hold Solana, myself included, say, look, Solana's done a great job at generating adoption. People actually use it. Now, there are other layer 1 solutions where you can look at the layer 1 solution, say that the tech stack is amazing. We've seen a lot of these types of projects before, but we're like, nobody's using it. And people call it ghost chain, or they say people aren't using it, or the marketing team's not doing a great job. One thing you can argue for Solana is people are using it, right? You are seeing active addresses here on Solana. So we'll give them a green tick here versus Avalanche, but Avalanche is not doing too bad. 1.3 million here in addresses. Both are heavily retraced from highs. We understand that, but there are active addresses. Let's now move on to transactions, right? Let's look at the monthly transactions, and we can see here, this is where Solana just eclipses everybody, right? 746 million monthly transactions versus Avalanche's 33 million. And you can corroborate that on the blockchain data. If you look at the on-chain data here for Solana, 746 million transaction, non-vote transactions, which I'm coming onto here for Solana in June. If we compare that to Avalanche here, just above my head there, June, 33.1 million. So it's night and day difference. But you need to understand one thing, because I see here a lot of people saying, oh, look, Solana eclipses everybody in transactions. Look at the detail, guys. You need to understand that with Solana, there are two types of transactions. There are voting transactions and non-voting. So you've got to look at the non-voting, okay? So we'll take a, and the figure I'm quoting, 746 million, is indeed non-voting. On Solana, non-voting transactions have always been significantly higher than the other layer 1 blockchain. This is due to an overload of the Solana blockchain because of two particular types of non-voting transactions: arbitrage and minting bots. Solana has a much higher ratio of arbitrage bots and NFT mining bots than other blockchains. These transactions are not due to human users. Think of them like spam mails. They merely clog up the system. That also partially explains why Solana, dubbed a high-speed, high-throughput blockchain, experienced several outages in 2022. So this is what we need to understand, guys. It's the exact thing that Solana is being praised for, which is the weakness, which is the Achilles heel in the system. And this is why I started to lose some of my conviction in Solana. That being said, I'm still saying very clearly that after Ethereum, Solana has more adoption than any other chain. It does, right? People use Solana more than any other chain. Now, it doesn't mean I think it's the best tech stack. It doesn't mean I think it has the best future. It's just where we're at right now. Only a small portion, roughly 7% of Solana's non-voting transactions can be traced to transactions related to DeFi and NFT usage. So I done the maths. Of that 746 million here, this 746 million, you can think of it as 52 million, which is still enough to say it's more than Avalanche, but it's not 746 million transactions going through. That's a slight data tweak we need to understand. Let's go a little further. Let's now go into transactions per second. And this is where Solana wins hands down. And it's no surprise. This is what Solana is known for. They are known for moving fast and breaking things. They were very quick to grow. They gained loads of new active wallet users, fast number of transactions. But this is also their weakness, right? This is why they created outages. And so when you build your portfolio, you need to think of your portfolio exactly as that. Do I want all projects which are reckless, or do I want some safe ones as well? At the same time, do you want all projects which are safe and dot their I's and cross their T's, and none which are innovating fast and moving quickly? You want to have that balance. You want some which move fast and break things, and you take the risk, when it comes in, like Solana and the outages, but then you also want some slow, methodical ones, which is why I hold projects such as Cardano. And so transactions per second is not even a competition. Avalanche only managing 137 transactions here currently versus over the 4,000 here for Solana. Let's then look at TVL, and this is an interesting one. Let's jump on over into DeFi Llama, and we'll start here with Solana. Solana's sitting here at TVL of 288 million. Guys, we're talking 10 billion at the peak in November 2021. So we've gone from 10 billion in total value locked down to 288 million. People are not using DeFi right now, and all projects have been massacred across their DeFi. So you can see here straight away, the majority of that 288, in fact, half of it, is being pummeled through Marinade Finance, right? So 143 million of the TVL is pummeled through Marinade Finance of the 288, and the rest is spread out across Lido, Solend, etc. Right? So very, very centralized on this one protocol, which is Marinade Finance. Let's then switch on to Avalanche. Avalanche sitting much higher levels of TVL into 700 million here, despite being severely in a bear market. Again, this was as high up as 11.3 billion in November 2021, and again, hugely retraced. 246 million of the 700 million is being contributed by Aave, another 216 million contributed by Benki, but people are still using Avalanche, interestingly. So you can see here, much more Avalanche being used in DeFi than Solana right now. So we'll have to give the green tick here for Avalanche here on TVL, and let's keep things moving on to our next metric, which is staking. And we can see here that from a staking perspective, Solana has 69.6% of its tokens staked versus Avalanche sitting at 62%. Now these are changing in real time, so these do change as and when they get updated, but you can see it's not massive differences. Both of them are very heavily staked, and a big portion of the tokens are being staked, which is always a good sign when you're holding a project, right? You want people staking the project, having a long-term commitment to holding those tokens, not just speculating. So with all that said, and with all the on-chain metrics now understood, with the technical levels now understood, which one do I want to be in? Well, to be completely frank, none of these two tokens have really stood out amazingly during this bear market. When we talk about a project standing out in a bear market, you look to a project such as Matic, which I use as the case study of how you perform in 2022. Yes, it was a bear market. Yes, everything was against all projects. But look how Polygon Matic came out, continued to do good biz dev, continued to upgrade the project, continued to do good marketing. And so many projects let themselves down in 2022. Solana being one of them. The network outages. Of course, the fallout from FTX played a big part as well. And then from an Avalanche perspective, we had the whole issue with their legal counsel and the undercover investigative journalism, which we covered off on the channel as well. That didn't look great. No major biz dev updates on Avalanche side. So to summarize, which one do I want to be holding? I'm going to continue to hold both, but I'm not actively looking to add to any of these just yet. Now, I am keeping a close eye on both these projects, particularly Solana, to see whether I change my mind and start adding again. I want to keep an eye on the metrics, I want to keep an eye on the outages, but right now, I need to make sure that my layer 1 section of my portfolio is carefully crafted. And so what that means is I need to make sure it's spread out with a couple of my favorite plays which haven't let me down in the bear market, the ones I still have conviction in, plus look for new exciting narratives which match the narratives going forward. And this is one of the major mistakes a lot of people make when investing through different cycles. One, they either become too attached to the projects they held from previous cycle, or two, they neglect new narratives which are up and coming. Now, you're not going to want to fall for this trap. And so the plan of action that I'm going to take is the projects which I held through the last cycle, which haven't disappointed me, which have continued to do good work, and which I continue to have conviction in, I'm going to hold. And if I'm feeling positive about them, I'll continue to DCA. But simultaneously, I'm looking for other new exciting projects. Like, for example, yesterday we discussed Cadena, we discussed Casper. The proof of work plays an interesting narrative given the SEC stance recently towards a lot of the proof of stake tokens. So we've got to make sure that our portfolio is balanced, it's diversified, it's got a mix of old and new, and that way you get exposure to all the different layer 1 solutions in your portfolio. Because the reality is, nobody knows which layer 1 solution is going to pop off, right? Yes, you can look at on-chain metrics. Yes, you can do analysis, but sometimes there can just be a new exciting project which pops out of nowhere and does what Solana does in the last cycle as well. Another important note, which I'd be remiss to not add in this video, is Solana does have a lot of selling pressure. You've got to keep this in mind, guys. Yes, I'm holding Solana. Yes, I'm thinking about adding some more if they play their cards right here over the next few weeks and months. But I can't help but think there are a lot of people holding a lot of bags of Cardano. People have bought a lot cheaper than you have, and even a lot cheaper than I have, and they will be selling. Every time Solana hits the next level, they will be sell pressure because there are billionaires sat on this who bought them at pennies and cents. Hopefully you guys enjoyed this video. If you like this type of content, then don't forget to smash up the likes. Don't forget to subscribe. Check out the links in the description to Bybit, where you can support this channel, but also buy yourself some amazing cryptocurrencies and trade along with us as well. Thanks for watching. Go watch my Cadena versus Casper breakdown here, and I'll see you in the next one.